I've been selling mortgages for over 30 years, and yeah, the pitch has evolved. New tech, new scripts, new talking points. But if I'm honest, underneath it all, I was still playing the same game. Prove your worth, say the right thing, close the deal, manipulate the people, repeat. So when the market shifted and I started losing deals that I thought were locks because of these crazy rates from banks, unsustainable low rates in our marketplace, my instinct kicked in. Work harder, push more, fix the script, tweak more. But something told me this time, maybe the real work just isn't in the script, but maybe it's also the programmer. That's what this episode's all about. Not just rebuilding a pitch, but rewiring the reason I'm even giving one. Okay, welcome to episode 4 of Build Mode. You can tell by my voice, I'm coming off a summer cold, so stay tuned later in the episode. Maybe I'll do a rendition of Black Velvet by Alana Miles. Kidding. Today, we're going to discuss the test that I'm making to the pitch. Small nuances, depending if it's a purchase or a refi, or is it a renewal? Am I competing with banks? Who am I competing with? And all of that becomes a factor now that's been more important than ever. Over the years, I've adjusted my pitch only a few times. The sales process has never changed. Discovery call to application and underwriting to a strategy session. But this market exposed something. I was using a 30-year-old foundation in a completely new game. So, of course, I opened up ChatGPT, dumped in everything I could. My existing pitch, my concerns, the losses, the real world experiences of what's going on in the market and the rates that are being done and what's happening. And I need to rethink this from the ground up. First step, discuss the frame from having people feel like all the work we do is valuable for them. Hit it directly in a discovery call about shopping around. Do it yourself or let us do it for them. See, we spend a lot of time making the case that this valuable advice that we give is worth paying extra for. And to a certain extent, that's probably true. But now the divide is becoming bigger. I mean, it's pretty tough, I gotta be honest, to explain to people that they should pay 20 or more basis points for the wonderful advice and the strategies that we as mortgage professionals can give them. When it was 10 basis points or, maybe even 15, that's even tough, but 5 to 10 basis points difference, I could make that case, but it's becoming a lot more challenging. So I needed to hit it from a different angle. And so the second step is to let them know the thing they will get from us that they cannot get on their own when they're DIYing it. This is super critical, and I'm going to give you some examples that I've come up with. And then the third step, I've always made sure that in my discovery call, I find out who I'm competing against, but I really want to know if I'm competing against their bank. Now, of course, a lot of the potential business that we can get, particularly from adopted mortgages, which is a big part of our build, is renewals, people that are coming up. So I need to make sure that if I am competing with them, I'm going to show you an example of a renewal I'm working on that I'm going to win, but I would never win it in just the old way that I would approach those types of things. And the last step of the discovery call is to enroll them in the next phase of our sales process. Then we build the strategy session. Come on over to my desk and I'll show you an example. Okay, so now what I'm going to do is break down the discovery call, and I'm also going to share some examples of strategy session that builds on this, what I do in the discovery call. So I'm not going to go into a lot of detail about, that's an entire course that I've done in the past called Sales Mastery, but in terms of why discovery call and then setting up for the strategy session. But I will say this, I do think it's the right way to go. I know that a lot of mortgage professionals will just, start right out of the gate with a 45 or 60 minute meeting. That's not for me. But anyways, the discovery call, I really have 3 objectives. 1 is to find out if there's even a deal here for us to do. 2 is who am I competing with and how am I framing that competition? And that's becoming obviously way more important in the current environment that we're working in. And number 3 is just enroll them into the next part of the sales process, or enroll them into we're working together. So anyway, an example of that would be, I often start those discovery calls with just setting the tone, which gets me into the slot, but also makes it clear to the customer what we're doing. So it's like, hey, I just want to let you know what this call is about. I call this my discovery call, which is me finding out a little bit more about you and what it is that you're trying to do. And I'm assessing whether there's a good fit for us. And you find out a lot about me and what we offer and, what we're about. And so that you can see whether we're a good fit for you. And if we both think that that's true, well, then we'll move on to the next part of the sales process. Or I would say we just move on to the next part. And how does that sound? And most often people are like, oh, that sounds great. And it was really clear. And then I just kick it off with, okay, tell me what's up. Tell me what you're trying to do. And so that gets them talking and me pulling notes, understanding where I'm going to have to go and how I work with this. And remember, the goals are, is there even a deal here for me to do? So I'm asking questions that sort of get me into determining whether or not they could be qualified, or, where we sit in the competitive landscape, which also brings up the, what are you doing with competition? And so what I used to do there then was to just sort of really, in terms of the enroll them in the next part of the sales process, is really me explaining to them what it is that we offer that they should go with. And if I make that compelling and strong enough, most people don't even shop around, or at least that's been the experience. But I think that's changing. The information is too readily available. People are using ChatGPT. People are Googling all of that, I think, more than ever. And the banks are just way more aggressive. So pricing is becoming more of a concern than I think it ever has been before. And so I want to head this off at the pass. Like, I'd rather deal with it now than later in the sales process after me and my team have added hours of additional work. So particularly if it's a refinance or a renewal, because I know I'm going to be dealing with an incumbent lender. But if it's a purchase, I might sort of say, I also want to find out, well, who's your bank? And so sort of the highlights that I hit with in terms of why they should choose us is, we do an exhaustive research of the market and we come with the 5 best options for you to consider. And then we talk through what those options would be. And it's based on a really thorough analysis that we get from a subscription that we pay for that allows us to get all of the interesting information from the economists and markets and what's happening in the markets. And we get a little bit more information to help us determine. I'm going to show you what that looks like. And then if it's a purchase, I would talk about the guaranteed approval program and why that's so important to them when they're out there making offers. That's important to really nail home so that they see that, oh, that's something that I get with me, but nowhere else. And then I would also probably hit on, lately I've been hitting on no bank penalty, so I'll explain that to you in a second. But let's go into it now. In this example, so the setting here was a young professional woman who is, successful and easily qualified, AAA type client, referred by, hey, one of those realtors from episode 2. So, that's been, very fruitful for me from the Ownwell experience. And so for her, we went through the discovery call, and this was the first time I attempted this sort of new experiment, which was kind of saying something like, hey, Mrs. Client, or Miss Client in this case, what type of person are you when you think about decisions like this? Are you a do-it-yourselfer, or do you value advice and strategic help and support? And I think she said, well, what do you mean by that? I say, well, for example, and I would use my financial planner analogy, like if you were investing dollars, like would you just do it yourself, manage the markets, check out this, like where you should be buying and selling stocks or whatever? Because some people aren't like that. Some people do manage their own funds and do self-directed. I do. So, I certainly know that that's a thing. And so I want to cover this off up front. And so, and then I might also do a tongue-in-cheek kind of like, well, if you needed to hire a plumber, like, are you the person who would go and do that yourself, or would you hire somebody to do that for you? Like, where do you sit in that in terms of generally speaking? And it opened up an interesting conversation. And then I sort of went to, Okay, well, when it comes to mortgages, I mean, there's a couple angles you could go. You could be a do-it-yourselfer there and go out and find, Google and strategy. But here's some of the challenges that's involved in that is that, first of all the rates that you'll see are going to be insured rates because they're the lowest ones. But you're putting 20% down, so those rates don't apply to you, and so you'll be led down a garden path, and then all of a sudden you get the switch of, okay, well, it goes to this. That's fine, that's manageable. But the bigger problem really is, how do I make sure I got the right strategy? The markets are really chaotic, and the markets are really hard to determine. And if I go with a low discount rate, then it's possible that all I get is just a transactional service. And I think that that's true, and it's worth exploring. And then I would talk about the next step was what it means by the type of stuff that we're going to bring into the scenario, and then I would bring in the no bank penalties, which I'll explain. I'm going to bring in the comparison of the deals, and I knew that where she banked, and so now this is all a test and experiment. This is what I said earlier about rewiring how I think about these things, because a previous version of me would have been, I don't want to introduce this idea. And some of you may still be thinking that, and that's totally fair. I'm still working through this myself, but I just realized that a high qualified client like that, the chances that she could talk to her bank and get a significantly lower rate are pretty high. And God forbid if she even Googled and did that. But what ended up happening in this case is she was adamant about, no, I don't want to have anything about this. I want to go with the expert. The realtor that I like and work, he spoke highly of you. This is done deal. I'm like, okay, great. Now, what you'll see when I do the strategy sessions is I still didn't want to take the chance. And so let's move to that now. So if you look on the screen here, you could see that this is the comparisons that I did for her. I use a software called Compare My Offers. It's great. You can go with that as well. And so essentially what I did here first is I showed I put in the TD rate, which was a bought down rate. And a previous version of me would never, ever entertain the ideas of a bought down rate. But I started to model this with ChatGPT, and I'll explain in a second. But then I showed what the best rate that I could do at a monoline at that time with full comp. And then I showed some other examples so that it looked like, obviously, there's differences in the market. So let's go over to Lender Spotlight and take a look at, this would be the first place that I would start. I would look and see where the market rates are at, what's happening there. And then I also I pay for the subscription from Mortgage Logic News, which I highly recommend, not just for the tools that they have, which I can show you some, but also just for the fact that the information that comes out of this is so good. But in this particular case, I'm able to see, what are the, I'm competing on a 5-year fix, let's say uninsurable. This will tell me where the current bank rates are at on average, which is 4.19. You can see today that, this was actually encouraging because a lot of these are quite a bit higher, but we also know that they'll discount from here. And then it shows kind of the alternative, other, monoline lenders and who's out there. And so you can see kind of where's the lowest one here. So I now know Nesto's at 4.29, Pine's at 4.59. So, that's interesting. That's today. So I'm seeing some difference, like, okay, cool. But a week or so ago when I did these were significantly lower. And then I'm able to also take a look at, the provincial providers. Doesn't really matter that much to me, but it does give me, see what Butler's doing and see what True North and Rate Hub and some of the discount. There's a new one, Rate Buzz and Citadel. Those are the ones that when they Google, those are the things they're going to find. So I want to head that off at the pass, kind of see where I'm at. And so that bring it back to this, I decided that for this particular proposal, what I would do is this was a bought down rate of 20 basis points. So I'll show you how that looks. So right here, using the TD spreadsheet, I just like this because it's actually easy to see the way to do the comp. So I buy the rate bound by 20, it gives me 4.24. Now, I'll explain in a second what I do with that. So yeah, that means I'm only making 32 basis points, but I also get a 35 basis points volume bonus, so it's 67. Now I know many of you are going to say, oh, geez, why would I want to make 67? But 2 years ago, when the only thing that you could sell was a 3-year mortgage, that's what you were getting paid in and around that, and especially if you had to buy down. So I just rather do that than zero. And so basically then in this particular case, when I'm doing the presentation of the offers, I know that she has made it clear that she's going to go with me, but I'm heading it off at the pass. So I talk about, hey, here's what the, lower, this is representing at the time, sort of what the lower discounted rates online. This is that DIY stuff that I told you about earlier. But this is a restricted mortgage, and it's a grade of D. And the reason for that is primarily the size of the potential penalty. So look, you're a single woman buying this house. You told me that you may, in fact, move again, like you're buying a condo, and maybe you get into a relationship and then you move into the next house and you change. If you ever do anything with this mortgage, there's, a significant amount of penalties that could be involved here. But that's why it's restricted, and that's why we do it the grade. So then I showed what I could get in the market at full comp. And so I'm basically just sort of heading off at the pass. If she came back to me and said, hey, I did check my bank and they offered me, 4.19 or something, well then I'm, at least I can work with that. But if, I think it's been too long of us, this is a test, but mortgage professionals, hope and a prayer. I present my best rates and I hope they don't check their bank, or I hope they don't check online. And I think that's just becoming less of a good strategy. At least that's what I think. So back to the modeling. I went with ChatGPT and I sort of said, look, if I end up with, out of say 100 deals, and a certain percentage of those, I think I said 25 or 30% were at 60 basis points and the rest were at full comp, rather than I lost the money on those, on a certain number of those deals because I just lost them. So I think I said, well, if I lost 15% of the deals, what would be the revenue at? And, you can obviously play with the numbers either way you want, but I was trying to think through, well, am I better off to head this off at the pass, get a good client, get a renewal? But here's where the real, thing happened, and I'll show you it in another one soon. But then I went into, and the other thing with this particular lender is I offer no bank penalties on that particular lender. So this is an interesting thing. I've used this in the past in the environment that we're in now, where I think we're facing, higher rising fixed rate interest costs. And so basically I just say that if you choose this particular lender and you have to make a change midterm, and you do the next mortgage with me, then we cover this penalty for you. So let's walk through that one. Because I know some of you are probably, your jaw's hitting the floor, but I've modeled this many times and I've used it a few different times in different builds very effectively. So for example, again, I'm focused on the present moment. I'm focused on winning this deal, because if I don't win this deal, and wherever, like there's obviously some other scenarios where it's even more competitive than this particular one happened to be, but no bank penalties almost always wins, because I face it against what if you make a change, you're stuck with, in this case, a $5,600 penalty, whereas it could be zero. And that's a meaningful thing. And so particularly when you think about the difference, look at the difference in the balance at the end of year 5 with this difference in rate. It's only, what is that, $800 difference in the balance. So this 10 basis points doesn't amount to much. You need to show people this. You need to show them that this is, a meaningful thing. And so from that perspective, once I did that, hook, line, and sinker, like no problem. She's like, there's no way I would go with that restricted lender. She even used that language. I want to go with this open one, or more unrestricted lender, pardon me. And so, it worked. I'll give you another example. Let me just pull up. So here's a real example of renewal that's coming up in September, on September the 10th. And this is with RMG. And look at the rates that are being offered. And so 5-year fixed 4.24 and a 5-year variable at 4.2. So again, if I go back to a lender spotlight and I look at that and I say, okay, today 5-year fixed, that particular mortgage is insurable. Funny thing with lender spotlight, I have to go to uninsurable to be able to see TD's rates to be able to get that, but It's 4.39, which is good, Neo and Marathon. And so, I'm only 5 basis points off those, but, it's not particularly great. But I would probably, when I do set this up, I'm going to set it up with one of these two rates as the ones to go, or maybe Strive. And so you kind of go from there. Because remember, I'm competing against 4.24 on a 5-year fixed. I'm going to sell off of the variable because at 4.2, it's pretty tough to challenge to get there. But also, I'm currently believing that for these people, that's probably the better option for them. Because they had said to me, now here's where it's going to get interesting. Let's go back to no bank penalties again. So if I actually go here and I put this in at 4.24, and then these ones are, what did it say again? 4.39. If I do that here, then, that's going to be a 15 basis points difference. Is that, what's that going to plan out here? But it's the no bank penalties. Here's why it's important for these people. So this is a renewal. Deadlock cinch. I'm not winning this deal unless I can compete with the rate. So I'm going to make sure I have a competing 4.24 with TD Canada Trust. I'm going to make 67 basis points. Way better than 0. But I'm also going to show this one with the no bank penalties because they have told me that they're contemplating moving. If they move anytime inside that 5 years, they're going to need to be able to get off of that penalty. So here's a perfect example of modeling this no bank penalties. In a rising interest rate environment, most of the penalties, interest rate differential penalties, are going to be 3 months interest. In the previous builds that I've done this 2 different times in rising rates, I've done hundreds of transactions. And it's a smaller number of people who on the second deal, I end up having to eat the penalty. But even if I did, let's walk through this. If I don't show this rate over here and I just simply go, my best rate is 4.34 against it was more than that. 4.39 is my best rate against a 4.24 renewal. Like dead in the water, no chance, not going to get it. So that's 0. Or if I can show them that I could get them the competing offer at 4.24. However, you want this one at 4.39 because of the no bank penalties, because you said you weren't going to, you might be moving or selling your house. That's going to be a better option for them. And so in that example, I'd make full comp 439. Let's see. With Neo, for example, 110 basis points. 4.39 is a 45-day close, which is probably close. So 100 basis points. It was a $480,000 deal, so it was a $4,800 commission. Now on the next build, or probably the next mortgage, let's say they come back and they break this mortgage, then I'm potentially on the hook for, say, a $3,400 penalty. But on the next one, they're going to move up. So let's say their mortgage goes from $480 to $600. On that deal, I'm going to make $6,000 less $3,400. So what is that? $2,400. So put those two together on 2 deals. I'm going to make the 48 and 24. So call it $7,200 or 0. Because there's no way I could compete on a renewal in this environment with that because of the rate that they already got, which they can just sign this paper and be done with it. So that's the way that I think about these strategies now. Hopefully that's helpful for you. And more in future episodes, I'm going to talk about some other strategy session things that we do. This summer, I made a choice. Even as the leads slowed down, even as the fundings and apps dipped below my monthly goal last month, if you remember from episode 3, even as 2 massive enterprise deals that I've been chasing fell through, I didn't go into panic mode. I didn't abandon everything else to grind harder. I stuck to my commitment to enjoy all the areas of my life, not just the business. That's not laziness. That's reprogramming. I've seen this trap before. In 2008, I built the #1 mortgage brokerage in the country, and then I drove it off a cliff. Why? And once I got to the top and still didn't feel like it was enough, whether I was enough, I had a major breakdown in my hotel room, hours before receiving the Top Broker of the Year award. That moment wrecked my business, but it started the rebuild of me, a peaceful, grounded, intentional founder, one who builds with my whole life in mind, not just my business success. These last few weeks, my old programming came knocking on the door. You're falling behind. You're not grinding hard enough. Get back on the phones. You're underperforming. You're not living up to your potential. How many of us have heard those things? But instead of listening, I paused. I asked, is any of this actually true? The truth is, I was being deeply intentional. I prioritized dirt biking, camping, golf. I love playing golf. I spent time with my family. I met my second granddaughter just last week. And when 3 live deals came in, I trusted my team to underwrite them, and I went golfing. When I had strategy sessions to write, but it was 5 o'clock and dinner was planned with my family, I just let my team do it. In a few weeks, my new sales rep's going to be doing all of that anyway. I shut it all down. That can wait. Just yesterday, as an example, I had a full day on the docket for a Monday. But my son called and asked me to go to the driving range over the lunch hour and help him with his swing. I paused, and my true self spoke up. These are the life moments that are important. And I said yes. We had a great connection, and some advice that I gave him worked for him, and his swing was coming around, and we bonded. I came back to work and I carried on. A previous version of me might have skipped that moment. I'm too busy, but not this time. I'm actively buying back my time. Any and all tasks that I should not be doing, I don't do. I'm focusing on what really matters. This is important because I know some of you would be saying, well, this sounds crazy. Like, how can you just blow off business or, work less? And I'm convinced, I coach a lot of high performers. I'm convinced that really a lot of time can be saved by just getting out of the things that I shouldn't be in. So I now only make space for what moves the needle. I know that this is against conventional wisdom. I've fallen for that trap before. The only way to prove my worth was if I achieved success, but the problem is that was a lie. Whose success? Only business success? Whose measurement? This culture works for a while, and some of you may be at a place where diligent, focused work matters to get momentum, but it stops working when it's driven by a narrative that this is the only way to prove my worth. The last time I did this, my health went to shit. I ballooned to 215 pounds. I was so emotionally dysregulated. I ran over people. The anxiety that I lived with every day, I'm convinced gave me an autoimmune disease that I live with today. That's my parting gift from those challenging years. Some people blow up their marriages. Their relationship with their kids is empty. They're addicted to everything under the sun, and they try to escape those feelings of inadequacy. All for what? To prove they have a successful business? There has to be a better way. I can have the business that I want, that I create, and I can do that without sacrificing other parts of my life. That's the path I'm trying to prove this time. I know that some of you might be saying, yeah, but you're building a 5 to 6 mortgage deal a month business. Of course it's easy for you to have more time. My answer to that is that's the business I'm building right now. But I'm trying to get this to a significant volume. And as it grows, I will maintain this staunch position. I just will not sacrifice the other areas of my life for business again. This is the test. This is build mode. Also, I operate 2 other businesses and I still prioritize all the areas of my life. If you're a smaller producer like me right now, you can easily design this. And if you have high volumes, then frankly, it's even easier. You have people. I know this because, again, I am coaching high producing mortgage professionals, and I have for years. Some of my clients I've been with for over 10 years, and they've all built their businesses under the same model, re-healed themselves, built something they're proud of, but they're more proud of the life that they're now living. Many high producers today are doing way too much work in their business, and that's what slowly eats away at the other areas of our life. Buy back your time and only work on the critical things on your business. and driving revenue into your business. Then you have time to enjoy your whole life. Okay, big announcement time. What I'm talking about right now is strategy that's working, at least for me. In the background, I've been pursuing 3 massive enterprise opportunities. One of them, the biggest one, just said yes. 6,000 realtors, 25,000 real estate transactions per year, over 100,000 past clients. And we got the go-ahead to launch a pilot of the Ownwell experience to a test group of 1,000 of their past clients. I know. And initially I was a little disappointed. Man, I was hoping for more. But it opens the door. This is my foot in the door. This is what I needed. And this happened while I still prioritized my whole life. So yeah, while I was camping, training for my marathon, riding trails with my friends, being a good husband, father, and grandfather, I was also landing a whale. The grind didn't get me there. Peace did. Presence did. Intention and sticking to the plan. That's what did it. Before I even launched this mortgage team, I said the future would be built by those who own the databases. That's what I've been building toward. 2 of these 3 big enterprise clients that I've been chasing said no. But the 3rd said yes. And we got to win. We got to do well on this test. We got to do well on the pilot, because they said to me, if that goes the way we hope it goes, we're going to open up to 25,000 more clients. Bang. But more importantly, it gives me an opportunity to get the front end of their business, which is figure out a way to get the right way to get more deals from those 6,000 realtors and 25,000 transactions per year. So I did all of this without sacrificing my health, without neglecting my family, without grinding my soul in the dirt to get there. That's build mode. And I hope it gives you the permission to build differently too. This episode and build mode is sponsored by Ownwell. They're the engine behind the mortgage adoption program and strategy that I've been testing, and I'm about to scale it big time. So more on that soon. But if you're a broker and you're not using Ownwell yet, now's the time. Check it out at www.ownwell.ca/build mode and put in build mode as the coupon code, and you get $100 off, and we make a little bit of money too, which helps us in building this channel for you. This episode is also brought to you by Lendesk. Lendesk powers every mortgage that I do. And my strategy sessions are built with Lender Spotlight, as I'm going to show you a little bit later. And Finmo is obviously the best mortgage origination software in the country. This tech makes my business run smoother and frees me and my team up to do more of what really matters. Thanks for watching Build Mode. I'm really grateful that you're here. Sign up for Build Mode Weekly. The link is in the description, as I've got some nice gifts from previous episodes there for when you sign up, but it's also where we carry on the conversation. People email me all the time to ask them for more details on some of the episodes. I'm happy to help. And so next episode, I'm going to reveal what happened with that pilot pitch to my enterprise level opportunity, how I got it, and I'll show you how we are launching the pilot for them. Really fascinating stuff. I'll also share month 4 results from the business and the 2nd month of the Ownwell test to the original realtors from episode 2, the next layer of building something real. So hit the subscribe button. We let you know when new episodes are going to come in, and share this with a broker who's stuck. And for above all, keep building from presence, from peace, from right here, right now. Thanks again.